All right. Yeah, I think we'll start now. So I'm going to leave you, hand it over now to Darren Ward and Ian Heaphy. Yeah, thank you very much.
Okay, thank you, Farhan, and welcome everybody. Good morning, good afternoon, good evening, wherever in the world you are joining us from today. We seem to have a very good turnout of people here today, so that's great to see. Obviously, there's clearly interest in this particular topic, which is assuring people costs under NEC4 contracts. So in terms of today's agenda, there's sort of two parts to what we're going to cover. The first part will look at the contract requirements, and I'll be handling that part of the webinar, looking at an overview of defined cost, how that links through to the schedule of cost components, and then touching upon the basic record keeping requirements in the contract. I'll then hand over to Darren, who's going to get into the real detail of the auditing process. So looking at scope requirements, potential Z clause amendments, getting into the detail around the environment in which people costs are prepared, controlled and reported, then looking at how we actually visualize and interrogate that data. And it's all about making sure we have the evidence to support what is being claimed as defined cost. And as part of that, touching on disallowed cost. We're hopefully going to leave some time at the end for questions. If you do have any questions, you can type them through the Q&A function, and we'll pick any particular pertinent ones up as we go through the webinar, but leave the majority for the end of today's session. If we don't get a chance to answer all of the questions, we will try to follow up later. So in terms of today's speakers, so my name is Ian Heaphy. I'm a member of the NEC4 Contract Board. So I was involved in drafting the 4th edition of the NEC contracts, still actively involved in updating and adding to those contracts where necessary. And I work with clients, consultants, contractors in the UK and internationally in helping them get the best out of the NEC forms of contract. Darren, introduce yourself.
Morning all, I'm Darren Ward. I'm Managing Director of the Orange Partnership. We as a company specialise in the audit and inspection of open book contracts. We are 20 years old this week, so I won't get you all to sing happy birthday to me because I'm sure it won't be in sync and won't be in tune. But that's what we do as an organisation. Personally, I'm a qualified chartered accountant. I've been working in and around open book contracts, mainly NEC form, for 30 years, and have been involved in over 600 cost audits relating to people. And they varied in size from a few 100,000 to 3 biggies over 30 billion. So that's me.
Oh, great. Thanks, Darren. So first thing we'll look at then is the NEC suite of contracts. I'm sure many of you on the webinar are very familiar with this slide, just showing you the NEC4 contract suite with the intention that we as NEC produce contracts to enable all of the key players involved in the construction and operation of assets to be engaged on consistent forms of contract, all containing the best practice principles of NEC. Really, what I want to do with this slide today is highlight those contracts within the suite that have a cost reimbursable payments option within them, where the issue of assuring people costs will be relevant. So under the professional services contract, the engineering and construction contract, the term service contract, and the facilities management contract, under all of those main contracts and their subcontracts, we have options available on which the basis of payment will be cost reimbursable, in NEC terminology, defined cost plus fee, and part of that defined cost will be people costs. In the alliance contract, that is based upon payment on a cost reimbursable basis, and that contains payment provisions that relate to both an ECC and a PSC approach. And also under the DBO contract, design, build and operate, we also have the ability for payment for the construction of an asset or major refurbishment or repair to be delivered on a cost reimbursable basis. So in terms of today's webinar, we're going to concentrate on the NEC4 ECC, the engineering and construction contract. But just to reference that there are those other contracts within the suite that this will be relevant for. Dan, just click on. So as I say, a lot of the terminology we'll use, a lot of the referencing will be based on the NEC4 ECC, the engineering and construction contract. We will pick out a couple of issues on some of the other contracts, most notably the professional service contract, which, as some of you may be aware, in NEC4, we have now moved to a truly cost reimbursable payment mechanism under main options C and E, as opposed to the more traditional schedule of rates approach. And we'll come back to that as we get into some of the detail. So in terms of the ECC, those main options which feature payment on a cost reimbursable basis are options C, D, E, and F. When it comes to option F, management contract, that is based on the expectation that the majority of work will be done by subcontractors. Any work that the actual contractor does will be based on pre-priced rates or lump sum values within the contract data part 2. And so people costs are not really relevant unto that one. So it's options C, D, and E that we will be concentrating upon. Okay, next slide, please. Yeah, so it's going back one if we can. Okay, great. So this slide I think is very helpful because it shows you how defined cost is used under the different main options and also how that relates to the relevant schedules of cost components. So under all main options, defined cost is used as the basis for assessing a change to the prices due to a compensation event. In addition, in main options C, D, E, and F, defined cost is also used as the basis for payment, assessing the price for work done to date. And it's those main options where cost assurance, validation of accounts and records becomes key, because that is the basis on which we will reimburse the contractor for the work that they do. In options A and B, because we're only using defined cost for compensation events, we don't have to worry about disallowed cost because we already have requirements around the contractor reacting competently and promptly to compensation events and any cost being reasonably incurred. And also we can use the short schedule of cost components because we don't need the level of detail we need for those options where we are paying based on defined cost plus fee. In options C, D, and D, we have defined cost doing this dual function, assessing the cost of compensation events, determining the price for work done to date. And so here we need to consider the concept of disallowed cost, and we'll talk about that later. And we also use the schedule of cost components, if you like, the full schedule, because that gives us the level of detail we need to actually audit and verify the amounts being claimed. But we'll talk again in more detail about that and how that is sometimes added to in practice. And as I've already mentioned, for option F, as we expect the work to be done in the main by subcontractors, we don't actually have a schedule of cost components, and any work the contractor does directly is based on pre-agreed prices. Okay, another thing to be aware of when it comes to defined cost and fee under the NEC contracts is that we don't actually define what's in the fee. The fee has to cover for any costs that the contractor does not recover under the definition of defined cost. So hopefully we'll avoid any arguments over, is this cost in the fee or is it in defined cost? Because if it's not within defined cost, if it can't be identified within the relevant schedule of cost components, it is deemed to be covered by the fee. In terms then of amounts that are included in defined cost, they have to be calculated using any rates and percentages that are stated in contract data. And that's contract data part 2 by the contractor. And so, for example, under main option A, that would require the use of people rates that have been provided at tender stage by the contractor. For any amounts that are not covered by rates and percentages stated in the contract data, they have to be included on the basis of an open market or competitively tendered price. So they need to represent, if you like, value for money. And one way to demonstrate value for money is to go through some sort of competitive tendering process to actually show that you've been out to the market, you've got 3 maybe competitive bids, you've selected the one that represents best value, not necessarily lowest cost, because there could be factors around quality, availability, etc., that you also consider. You know,
just on that one, Ian, do you see that one overly relevant to people cost?
Yeah, I think it still applies, because it may be that the contractor has to go out and procure maybe a sub-consultant that's largely people, people-based. Maybe it's design, maybe it's additional design requirements, and you'd still expect that to be demonstrated as value for money. Also, if they go through agencies or whatever to try and get additional resource, again, there'll be a need to have some sort of benchmarking around that. In terms of internal resources, maybe less relevant, because people will have employment contracts that they'll be paid against. And it's, unusual for a contractor to maybe change their entire engagement or employment policy to suit a particular contract. But it's still something that needs to be verified to make sure it still represents that open market or competitively tendered price. Okay. And so looking then at options C, D, E, and F, the definition of the price for work done to date refers to the total defined cost, which the project manager forecasts will have been paid by the contractor before the next assessment date plus fee. So clearly referencing defined cost as the basis for making this assessment, defined cost plus fee. But if you just move to the next slide and you look at that definition, the contract requires us to actually include a forecast of defined cost yet to be incurred in our interim assessments. So as the slide sort of tries to show, at the end of our first assessment interval at our first assessment date, and let's assume for purposes of today that's monthly, you would, as the project manager, have to assess the actual cost that has been incurred to the assessment date and also forecast for the month ahead. And that is what would then be certified and paid. And the reason for that forecast being included is to improve the contractor's cash flow, because under the standard contract, it would take a week to certify payment, up to 3 weeks from the assessment date to make payment, and that period could be extended in contract data. So by the time the money's actually going into the contractor's bank account, they will have actually expended nearly all or potentially all of that forecast. And so that is why we include that, to try to make the contractor's cash flow better, less negative, but it is an issue. And again, when we get into the detail, as part of the auditing exercise, you need to look not only at what has been incurred, but looking at that forecast and how realistic it is. Come the next month, you would then do a reconciliation of the forecast to the actual. Just move to the next slide. So in the next month, you would reconcile what was actually incurred compared to the forecast, allowing you to correct any or under forecasts that have occurred. But again, something that needs to be picked up in the audit process, and then you reforecast again for the month ahead. So sometimes we're not just looking at what has been incurred, but also looking at forecast of what is going to be incurred and validating that through the process. So I've already mentioned that we have two schedules of cost components, a short schedule of cost components only used with options A and B, only used to assess compensation events. We then have the schedule of cost components used with options C, D, and E, and that is used both to assess compensation events and to determine the price for work done to date. And it's that schedule, that cost reimbursable payment mechanism that we're going to concentrate on today. Okay, so looking at the schedule of cost components, we have an initial sort of preamble to that schedule that says costs must be incurred in order to provide the works, and costs can only be claimed under one cost component. So that first bullet places an obligation on the contractor to demonstrate that the people, the resources they're claiming for, have actually been used in order to provide the works. So there will be an evidential requirement around these people actually working on the job, that they are actually providing something that is relevant to the works being produced. Also, costs can only be claimed under one cost component. So we need to make sure that costs included under people are not reappearing under other cost components. That cost can only be claimed once. Another important factor to consider in terms of the schedule of cost components is the working areas. And this is a defined term, and working areas are the site and additional areas which the contractor requires to provide the works. And those areas have to be necessary for providing the works and used only for work in the contract. So dedicated 100% to work under this contract, which means things like head offices, shared offices or depots cannot be classed as working areas. And that's relevant when we look at the next slide around people costs in particular. So in terms of people, this is, in NEC terminology, people is anybody directly or indirectly employed by the contractor. And the contractor is able to claim the cost of people, whether that's staff, labour, workers, etc., whose normal place of working is within the working areas. So people who are based on site within the working area are recoverable, whether they're working on site, at home, or remotely, as long as they are providing the works. We then have a category of people who are not based within the working area, so maybe based at a head office or a local office, but who are recoverable based on the time they spend within the working areas. So if they're working from home, they're working from remotely, they will not be recoverable as part of defined cost. And then finally, and this was added very recently to the NEC4 contracts, we've also now allowed for a category of remote workers to be included in defined cost. People whose normal place of working is not within the working areas, but have been specifically identified in contract data as recoverable wherever they're based, as long as they're working on the contract. So that would cover for people who are now based working from home or head office possibly, but it would need to be a pre-agreed list. And then just one final comment from me before I hand over is that when we look to people costs under the short schedule of cost components, that's actually based on a schedule of rates, a schedule of people rates. I know that Darren's going to pick up on people rates compared to actual cost when he looks into the audit regime itself. I think, Darren, it's over to you.
Okay.
Yeah, just skip over that. We'll go through to your section.
Okay. You're going to start to take control now, Ian, can you? Yeah. Right. Thanks, Ian. Right. So for the next 30 minutes or so, I want to go through some of the things we do and recommend in terms of inspecting accounts and records. So I'm going to start by talking through why and when we inspect. We'll then go in a little bit of detail into the contract and the rules of the contract. We'll then drop into understanding the project or contract environment. Beyond that, we'll go into looking at data and visualizing your cost data. Then we'll go into testing and sampling. And as we go through these slides, what you'll see is we'll bring out some experiences, myself and Ian, and we'll end up giving a few little tips so that when you go out to do your actual inspections, you'll have a little bit of advice from us guys. So next one, please, Ian.
I think you've still got control of
the system. Got it?
Yep.
That's okay. Right. So, well, I think I've gone too, Ian. Apologies. Right. So let's start. Why are inspections important? Yeah. First and foremost, if we're talking here about an employer, the employer wants to make sure they pay what is contractually correct. So what we're looking for is a contractor producing defined cost for people that ultimately is accurate, it's transparent, and it's well controlled. We're looking for right first time costs being submitted through the applications for payment. And Ian's mentioned that process earlier. But basically, we're looking for good open book principles. So this doesn't matter whether you're a project manager, a cost manager, you're an auditor, you're a supplier, whoever you are, we're all trying to take defined costs on this journey of being accurate, well controlled, and right first time. So one of the aims today is to give you that sort of increased awareness and to provide you with a few tips. It doesn't matter what side of the fence you sit on here, whether you're a contractor producing information, whether you are a project manager or cost manager, inspecting or validating information. The main thing here is there shouldn't be any games. It's all about getting inspections done regularly, getting confidence from those inspections. So just on the right-hand side there, some basic tips and guidance. Just hang on, just need to lose my screen because I can't read it. So a few things first and foremost. When we're doing inspections, and we're talking here whether you are a project manager or a cost manager, full-time engaged on a contract doing inspections, or you're a third-party auditor, someone like ourselves, yeah? Never leave inspections to the end, yeah? And the thing I always recommend to people is think about the 3 lines of defense. So line 1 is what the contractor does to capture good, accurate, defined cost. It's processes and controls to make that application right first time. So a really simple example, if you've got a contractor who charges recruitment costs into its cost ledgers, that may fail the test of the scheduler cost components. So what you'd like to think or see is that that contractor, when it produces the application for payment, it self-disallows that cost element. It takes it out of its ledgers and doesn't actually apply for it in the application for payment. So line of defense 1 is having that contractor doing robust process and control management of all its costs to get an accurate AFP. Line 2 is when the AFP lands, the project manager or their cost manager goes through a valid inspection period, requesting records and accounts as required to build confidence in those assessments. And the third line of defence would be an independent, either company like ourselves, potentially internal audit. So why would you want that third line? Very simply, it could be that you have additional stakeholder requirements. You might have to provide an audit report further up the line for someone, such as the National Audit Office, the Treasury, yeah? Or it might just be you want that third line to provide some comfort on a high risk or contentious error or issue.
Yeah, and I think, Darren, just picking up some really good points there. Certainly, I think putting that effort involved at the start is key, because often you can save a lot of hard work later if you spend some time working with the contractor, the consultant initially, understanding their costing system, how they record, where they record, to try and actually align their systems and processes with the contractor requirements. We don't really want to get to reinvent the wheel and produce, things that are difficult for them. It's almost like a gap analysis. What do they do? What does the contract require? How can we, with the least effort, marry these things up? Okay, where necessary, there may be an overlay of information, but try to minimize that. And I think one other thing you picked up on as well was that there should be that meeting of minds, that the contractor should want to get paid what they're due. The project manager wants to verify that is due. The client wants that comfort. So everybody should want to work together to achieve what is an accurate set of records, because that's in all of their interests.
Yeah. And I think on that, Ian, I've tried to sort of pick that up with this graph here. So the graphic is just trying to show the project cost being the bell curve and the blue line, which is sort of millions of pounds of spend. And then the two common inspection sort of journeys that we often see. So the orange journey is that one that Ian's talking about, where you put a lot of effort in the early days of the project to understand how cost is captured. You understand the key processes and controls, and then you can sort of step away, and then you only ramp up as the project nears completion. However, what we do see a lot of is the opposite, really, where there is ongoing inspections on the red line, month in, month out, that don't really draw any conclusions. And then as the project completes, we see massive demands for accounts and records and inspections dragging on long after the project is finished. So best advice is always try to get in early. The other thing I would say is get in early, but do it with a very planned approach. Yeah. One thing I don't like seeing is people who say, well, we just get stuck in. We roll our sleeves up, we get stuck in. Week one, month one, just demanding timesheets, pay slips. It's not smart. So some of that will come on to. So that's why and when we audit. So Ian gave a very good example earlier of the basic vanilla contract NEC treatment for people cost. However, these T's and C's do get added to or amended through scope requirements and Z clauses. And why is this? Well, we went through options C, D, and E. And in most of those situations, it's quite clear to see that the client employer is really taking the risk, the financial risk, yeah, in terms of what this project or contract will outturn at. So any client employer will sensibly want to think that their supply chain looks after the money as if it was their own. So as the value of contracts increase, expectations on rules and records increase. And that's exactly where these will appear as additional requirements in the scope or amended Z clauses. So just a little tip on this one. if you're involved in that setup of a new contract, really be practical in any accounts and records that you might add to the scope or additional rules. Yeah. The current wording for inspection is that it allows the project manager to inspect accounts and records. I very often see this changed to the contractor shall supply accounts and records. And what this means is every application for payment is followed by folder after folder, hard copy, electronic, of all the accounts and records that support the costs claimed. I then look to see whether these accounts and records are actually checked. They probably aren't. It's just there as a comfort factor. Personally, I think it's lazy and it needs to stop.
And I think, Darren, I've seen some examples of that where it's been used very negatively as a way of trying to refuse payment unless this huge amount of data is provided, this nth degree of data that isn't really necessary. It should be the information is available for inspection, but people sort of hide behind it and say, we're not going to pay unless you provide all of this information, and there's a cost to providing it. You know, there's an environmental issue if you're doing hard copies, etc. So you do have to be very pragmatic around this, and you may need, the key thing the contract requires is making the information available for inspection, not providing it.
Yes, absolutely. That's absolutely right. And again, I mentioned earlier, you've got to be fit for purpose. I often see, a sledgehammer to crack a nut, whereby what we're doing is we're requesting record after record, rule after rule, we're looking to amend or change for what is in effect a fairly low value or low risk contract. So amendments do happen. So let's just touch on a few typical amendments. One we commonly see is where a client or employer is particularly keen to control the mobilization of people, usually staff. And what we're looking at here is where a client would want to know that people are only brought to site whether A, they're in budget, or B, they have the suitable qualifications and experiences needed. So each new worker coming to site has to have a mobilization signed off prior to charging commencing. We see timesheet detail enhanced. We see extra authorizations required on weekly and monthly sign off on time. And we also see pre-authorizations quite commonly for things like overtime. We also see a lot of amendments that now start to use independent time verification systems, whether that be hand, face, eye recognition, where the client employer wants all the hours charged to be independently checked to these systems. And again, we'll come on to an example of that later. We sometimes see the specific cost of components just simply deleted or heavily amended. And as mentioned earlier, we do see occasionally scheduler cost components swapped out and rates brought back in as a simpler way of reimbursement. So what are my tips in this kind of area? Yes, extra rules are needed and they can be great suggestions on bigger projects. However, they do need to be there from day one. And importantly, a lot of these extra systems and checks are becoming relatively cheap and effective. Yeah. So many organizations I work with now have labor swipe systems that haven't cost a lot of money to install, and they drive directly through to the contractor's payroll.
And so, Darren, where you see these changes being made, are they sort of pragmatic and beneficial, or do you sometimes see them going too far? Because obviously, if you cut things out of the schedule of cost components, that goes into the fee. That's going to have to be recovered somewhere.
Absolutely, Ian, and that is relatively common. I do see people try to be a little bit too clever at times. They just say we don't want to pay for something. However, it's a genuine cost very often of the contractor. So as you rightly pointed out, a contractor may bid cost plus 10% on one contract, but when they get wind of what they don't want to have paid by the employer or the client, we'll then see the next project will be cost plus 12%. They'll add on that bit of risk because of some of these subtle changes on cost component amendments. So that is relatively common. So why are those scope changes and Z clauses amended? Why are they so important? Well, you can't inspect, review, audit, assure, whatever words you want to use. You can't do that unless you understand the charging environment. And so often a quick review of the schedule of cost components and the contract data just simply isn't enough. So if those additional rules are there, you've got to go and find them. And only then do you understand what the full charging landscape is. Yeah. So, you have to remember here, there is a risk of disallowed costs if those costs are not justified by the accounts and records. And it's the Z clauses and the scope requirements that can enhance those records. So it's really important that you dive deep and go looking. So the tip there is always a very thorough review of the whole contract is key prior to any kind of inspection. And especially important if you know that contract has been heavily amended or there are lots of cost or commercial related processes referenced in the scope. So important that you know the rules.
I think just going back to that previous slide as well, there was a comment there about a disallowed cost for amounts that aren't justified by accounts and records. Justified in that context means basically to the satisfaction of the project manager. But the project manager does need at times to be pragmatic around that. We don't, again, want to see reams and reams of paper, lots of additional information being provided. You should have set up at the start what information you need to see. You need to look at that. Is the evidence there? Sometimes it may be that certain costs are centrally allocated and then pro-rated out. But if you know that cost is incurred on your job, there's a reasonable audit trail to follow it to source, then that may be sufficient. And if there is a situation where the project manager maybe wants more evidence, there is the ability to change the scope post-contract. The amount of information can be refined. Okay, it's a compensation event. It may lead to an increase in the price of the job. But if it's information the contractor already has, they're just making available, that cost should be limited. But again, we need to make sure that we don't create a huge volume of unnecessary work by asking for records that go way beyond what a reasonable person would expect to see.
Yeah, and I'd add to that, Ian, sometimes people ask for accounts and records that simply don't exist. Yeah. And a good example there would be if I think about how you guys in your sort of inspection duties, you might be involved in a project, say 2 years old. So you might only do 10, 15 audits in your career. And what I see, and again, which worries me a lot, is project managers or cost managers demanding the sight of certain records that just don't exist. And then I get to the root cause of the problem. And the project manager or cost manager will say to me, well, on my last job, the contractor provided X, Y, and Z. But this job is a completely different contractor. So often the accounts and records are quite unique to the particular supplier. People often overlook that.
And I think, Dan, that goes back to the earlier slide that if you get the auditing regime in place earlier, you can identify whether there is certain information that maybe you want to see that isn't there and get that to be put in place, or look at alternative ways of getting a similar level of evidential support to the cost being claimed.
Absolutely. So get involved early, but get involved, as I say, not just by rolling your sleeves up and asking for records. Get that understanding of what the supplier can produce. It's so important. So just the other one that we want to touch on today is rates. So as Ian mentioned, the move on NEC 3 to 4 we moved the PSC from rates to schedule of cost components. And in the last 3 or 4 years, I've been involved in audits on many NEC4 contracts where this has moved back to rates as an amendment. And that can be for both staff that are directly employed or labour. So why? Why does this happen? I want to talk through some of the pros and cons of each. And I talk through this because it is a real sort of hot topic. People always ask me, what do you prefer? What's easier? What's right? What's wrong? So I just wanted to go through some of the basic reasonings behind each. So let's start with rates. What are the pros of reimbursing on rates, whether staff or labour? It's simple. Everyone loves it. It's rates times hours, incredibly easy from an admin point of view. Good for short duration, simple projects or contracts. You can allow for inflation with X1, and you don't have to do a lot. You set a rate up against a role, a grade, or trade. Very, very simple. You don't have any data protection GDPR risks necessarily, as long as you get nice wide bands on the rates. What are the cons? Because that all sounds, does it sound too good to be true? I don't know, but the cons of it. Firstly, rate cards are very often poorly prepared and they take time to do right. People add to without thinking. So, good example, Joe Bloggs is £30 an hour, his standard rate. Someone adds in an overtime rate, £45 an hour, because he's paid at time and a half. That is rarely correct, because in his £30 an hour, there will be costs in there that simply don't increase by that 50% factor. There might be things in like car allowance, health benefits. There could be pension. Not all overtime is pensionable. So what you often see is the true cost of an overtime rate is something less. If I was a betting man, £30 an hour for normal pay. If that person was to work half hour of overtime at 50%, I would imagine the overtime rate works out £32, £33 an hour, not 45. The other one with rates is sometimes there's no cap on what can be charged during a day. So John Smith this time at £30 an hour, he's salaried. He doesn't get paid overtime. But on the rate card, he can charge the hours he physically works on his timesheet. If he works a 12-hour day, when his normal day is 8 hours, under the contract, you'd arguably charge 12 hours at £30 an hour. But he's not paid overtime for the extra 4 hours. So if this individual was charged on a schedule of cost component basis, you would pay the lesser amount because the only charge and cost that day is the 8 hours at the £30. When you build these rates up, we often see quite generous estimates for the cost components, and that means there's more likely that they will over recover against the true cost than under recover. And to get right, you do need rules to capture. So things like, when does a shift start and end? Are they paid travel time? Are they paid breaks, lunch break, tea breaks? Rates for overtime, weekend working. To get it really accurate, you need to think of all those wider scenarios. So if you are going to use rates, and many people do, I always insist on a really thorough pre-contract audit, followed by adding those clarifications on those time charging rules.
I think that's some really great points there, Darren. I also agree that using a schedule of rates does seem quite easy, but actually you then put a lot of rules around it over what hours are chargeable. As you say, do they get paid overtime? Do they not get paid overtime? Do they get time in lieu? There can be a whole range of complications that you have to add in an entire rule book around it, which actually then detracts from the concept of it being a simple solution.
Yeah.
The other point I'd highlight as well, and I've seen this in practice, is that if you go to a schedule of rates, there's a risk that the contractor will include a recovery of profit and overheads within the rate. And that may then sort of conflict with the target cost mechanism around the incentive to reduce costs to create gain, to create benefit, when actually there could be an adverse driver of the more hours we burn, the more we earn, and that could actually overcome or counter any overspends elsewhere through a pain share, gain share mechanism.
Yeah, no, I totally agree, and they're not as simple as people think, but in the right environment, they do work well. Yeah. So if we then look at the schedule of cost components, well, in many ways, the pros and cons will, of course, be the opposite of rates. So the pros are always more accurate. You are paying the correct cost per person, or certainly should be. I feel they're better on long duration or larger projects, and no one is taking any sort of over or under recovery risk. But they don't come without the complications. The audit trails and what you need to do to inspect can be more complex again than most people think, and that can be beyond the average reviewer. You can get in really deep on areas like holiday pay accrual, underfunded pension, hours divisors, journal entries, and hours reconciliations back to applications. The other one is you've got to be comfortable handling this more sensible data because of GDPR and privacy rules. Not everyone wants to do that. And it's much busier. You know, the schedule of cost components is a whole list of items that can be included. Yeah, so certainly not as easy and as simple to visualize and work with as rates. So if you're going to go down this route, what do I recommend or consider? Get some finance or audit support. Yeah, because you're going to come across pay complexities for sure and GDPR issues. The other one that I think should be considered is a bit of a hybrid on the two, and I think it works pretty well. And that is where rates are used for charging on an interim basis, and then they're trued up to the schedule of cost components at regular intervals, annually, 6 monthly, typically.
Darren, just on that GDPR thing, it's coming as a question from one of the people on the webinar. And how much do you see as that being used as like a blocker or an excuse to provide information? How real an issue is it? Given you're not necessarily taking that data as such, you may just be reviewing data that's already there and witnessing it rather than processing it. Or do you find that is a genuine issue that you face in your role?
I think it's a genuine issue, Ian. I think it is put often as sometimes as a blocker to stopping an inspection or audit happening. But then the contractor in good faith has signed up to an open book arrangement. What we find is that we should recognise what the contractor's GDPR requirements are and work with them and around them. Because I've seen many examples where information officers of contractors have had a very nasty experience. You know, private personal data has been lost. We've all heard the stories, things left on trains, on memory sticks. And as a result, possibly that contractor has become overly cautious in how they control the release of sensitive data. So what I find is you have to work with those people, understand what their concerns are, again, share how you look to process that data to give them that comfort and assurance. So again, this is the importance. If you're going to do open book audits on people costs, you need to know how to process this information. You might end up working, for example, with anonymized data. Yeah, so there are good workarounds. So firstly, don't be surprised if it gets put in front of you as a blocker, but work with that contractor because they would have done these audits before 99 times out of 100, and it's just working out what the process needs to be. So just want to very quickly just show the reasoning behind where rates can fall down. So this is just a very simple example, sticking with the numbers in yellow, really. So the left-hand side is a potential person cost. So at the start of the year, we've worked out an individual could cost £68,000 with the 6 elements above. The right-hand side is the working hours that we've got for the individual, 1,760 hours. So one divided by the other, a £68,000 forecast cost, divided by a working forecast hours of 1760, gives a contract hourly rate of £38.64. That would be typically what you'd put into your contract data as your pre-agreed rate. But of course, it could be wrong. So when we look at the left-hand side of people cost, we've got 6 elements there. Color coding suggests risk. Column 3 identifies who is required to produce the rate card information. As I mentioned, to do a rate card well and accurate, you need commercial, FD, HR, payroll. These people all need to input into the rate. So what could go wrong? What could happen? So on the left-hand side, there was no bonus paid. So the FD assumed 15%. There was no bonus. The FD assumed that the employee would take up a very generous company pension scheme and that the company would match a 6% contribution of the employee with a 6% employer contribution. In reality, Joe Bloggs didn't want to join the pension scheme or paid a lesser rate. And then finally, commercially, the commercial manager thought Joe Bloggs would work on site 5 days a week. Instead, he works on site 3 days a week and 2 days from home. So the outturn cost for subsistence, lodge and travel is potentially less. So under a schedule of cost components, the £68,000 could end up near a 60. On the right-hand side, this person never did any training, was never sick. So the actual hours they worked in the year could have ended up something like 1820. So if you work out when you used to audit that rate a year later, what you should have seen was a total cost on the left-hand side, circa 60 grand, hours on the right-hand side, 1820. That should have drove a rate of about 32, 33 pounds an hour. So in using rates in this example, you've overpaid 15 to 20%. And that's just looking at a staff rate. Gets way more complex for labour because you've got things like overtime and strange work patterns to consider. And you can easily go over budget. No, sorry, you can easily just get the rate completely wrong. So that's a little bit about rules. We start to talk about the project environment. Yeah, what have we learned so far? Yeah, we've learned what the basic contract rules are. We've got a feel for the application, the numbers, headcount, cost. But what we want to do is we want to see where these controls are really good in practice. Yeah, a good environment with good control reduces the risk of error. So let's see the practice. So firstly, visit the project, contract, visit the site, understand the day-to-day processes, speak with key people, project managers, labour managers, understand how the staff workforce, the labour workforce, agency, etc., how costs are captured, managed, what key reports are produced on site. Do you conclude that you've got a good first line of defence, that your main contractor is doing everything they can to provide right first time costs? So your tips here is you're trying to seek out what key controls, what checks and balances you can rely on. And the more you can rely on, the less you need to do detailed inspections, or the less you need to do repeat inspections. And it's starting to make your work much more efficient. What do we do then? I like to take stock. Very simple. I've got a good understanding now. I know the contract, I know its rules. I've been to the site. I've understood what the day-to-day operations and controls are and what reports can be produced, for example. I scribble it down, whiteboard, piece of paper. Try to visualize the people movements. We've got X people over here doing that activity, costing that per month. Y people over here costing this. We've got people here that are part-timers, full-timers. Yeah, you're starting to get a real feel for where people are on your project. That's starting to shape what you might want to go and test. Do you want to spend more time testing group of people X or group of people Y? more time testing staff, or labour. As you form that approach of what you want to look at, have a chat with a colleague. Yeah, find someone on your project, bounce ideas off. They might come back to you. Why are you spending all your time auditing group of people X and not Y? That's starting to help drive an efficient audit or inspection approach. Really important, because there is a danger, my view, the industry could be over auditing and over inspecting. And Ian mentioned this earlier about how countless volumes of records are being requested and poured over. So we request too much, in my experience, and often not in the right areas. People are still spending too much time auditing and inspecting low value items like expenses. Now you've got to get into your actual data. Yeah, let's start looking at the applications for payment. First thing, they're often very unfriendly. Yeah. So what I mean by that is you might get staff costs come in. It might be one dump of cost per month, a journal. You've got no detail on hours, cost per person. You might not even have any named information. It could be employee number. Labour costs, similarly, won't have a lot of detail, might just have a cost per day or per week. And if you're looking at labour-only subcontractor or agency costs for people, you might just see an invoice. Again, you've lost the detail of the hours, the workers, the rates. So, important here, remember, your contractor, your supplier, they do what they do. That is standard to their accounting system. And they are not being awkward if that doesn't align to the contract or the information you want. So it's really important that you work with them, not against them, to get that extra granularity required. And that will often be the detailed payroll reports. Again, Ian mentioned the GDPR of that. But once we get into those payroll reports, we can start to do our detailed audits and inspections. That will often mean you've got to liaise with head office finance or payroll teams. But then we can start to build better data sets. Other data sets people might want to look at alongside the accounting. We mentioned earlier, swipe data, when you can see the actual times people come in and off on site. We look at global timesheet reports. They might show you the time that's been charged per person, per hour, for the whole duration of the project, going back several years. And the other one we mentioned, you might look at some kind of mobilisation approval log. So that's data sets that aren't the core accounting data, but might be useful in the inspection work that you're going to do. So again, be sensible and think what other data is produced. And it might be more site related and not accounting related. And that may have limited benefit. I've seen a lot of examples where people look at site records, such as site diaries, set to worksheets, daily briefing sheets, and try to use those to justify attendance or hours worked. They're not for that purpose. They are there really to support progress of the works, health and safety, etc. They can be useful, but they don't replace accounting records. So, what do you then need to do? You've now got the payroll report with X levels of detail. You need to start to trend and pattern your data. Make the data come alive. So start with simple and obvious patterns of data. Look at people cost over time, per day, per week, per month. Split it, labour, staff, agency, labour-only subbies. Probably best to look at data monthly. You can track the same in terms of hours booked. So don't just look at the cost, look at average hours, day, week, month. All you're doing here is trying to look for something that doesn't hang together. It's not the norm, it's unusual, doesn't align to the works or budgets. Yeah. What do you need here? You need some basic Excel formulae, pivot skills. And then what you'll do over time is start to develop these set visualizations that you can produce month in, month out, gives you a view of where the money's spent, and ultimately will give you better focus on what accounts and records you want to inspect. Some very, very simple graphs. Here we've got labour costs per person per week, 7 employees, nothing out of the ordinary until you get to the 24th of April, 2024. Yeah. It's not at scheduler cost component level to start with. It's just a total cost per labourer per week. Here's an example where the costs claimed weren't correct, weren't allowed under the contract. They actually related to back pay, much of it on a previous project. So again, you're looking for an outlier, and that's a classic example. Something here's a little bit more involved. We've got the columns are people cost relating to supervisors, each colour representing a different person. The left-hand side, we can see purple and blue people. These were the 2 supervisors who on this project were mobilised. The black line shows a flow of labour cost. So it shows that as the labour costs finish towards the end of the project, we start to see more and more supervisors being added. So the far right column, we've got 6 colours in the column. That is the costs of 6 individual supervisors, of which only 2 have been officially mobilised. So again, patterns of data like this gives you areas of things to inspect and challenge. The other one I was just going to talk about is when you start looking at labour and staff data, you start to get into that lower level support at a scheduler cost component basis. Yeah, we start to look by cost component. First thing is, do they align to your contract, your scheduler cost components? Some items might align, but might not be allowed in full. Classic example being bonuses, redundancy. Most contractors would book these to the contract they're working on when the event happens, but those would not relate to the timing rules of NEC. So if someone just starts on a project month 1 and they receive month 1 their bonus for the previous 12 months, that would be wrong for this contract or project to pick up the full cost. So it's very important that what we try and do when we get this lower level detail of schedule and cost components is we actually work it up and look at it as a percentage of people cost, whether it be based on salary or wage, to see if the cost component hangs together. So really important here is get these detailed payroll reports from your supplier. Start to understand which items are supported by payroll and pay slip. Those are rarely wrong. And then think of the other items that will need alternative people to support. For example, company car costs, health insurance costs. They do not come on a pay slip and they are not via your payroll people. So you've got to widen who you need to speak to. So good tip is audit across, which meaning people, but audit down in terms of cost component. So here, just a very simple graphic of people cost. You've got people named on the left-hand side. You've got various columns showing the cost elements. And it's the bits in blue that stand out that you might want to query or question. So if we look at, for example, the cost components, which are the column headings, you go across left to right. Income protection. Is that an allowed scheduler cost component item? Possibly not. So something like that you might want to understand better. Some of the blue sums that are highlighted are significant. Why are they significant? Because I've added the columns in yellow, looking at the percentage of that cost element as a percentage of salary. So you'll see Phil Blue had a very nice bonus of £30,000, which was 27% of his salary. Is that right or wrong, or just generous? Yeah, again, something worth looking into. We can look at employer's pension for Linda Gray at 17%. That looks very, very high compared to all the other percentages. Again, is it in tune with what you think those values should be, or is it a potential outlier? Employers' national insurance, Millie Sky, 17%, way too high. Yeah, should always be way less than 13.8% because there's a threshold in there as well. So what you're doing here is you're just looking across, elements to see what is unusual and worthy of further inspection. You can go down a column, staff life cover. Everything there is 0.3% of salary. Yeah, very simple to then get a copy of the staff life cover policy, look at how the costing works to validate that 3.3% is accurate. So again, looking down the columns and across the rows. The other one I just talked about earlier was where we can use other third-party data sets. We've talked about swipe hours. You can also use labour movements versus equipment, operated equipment. You can do some nice trends and patterns there. We often see GPS vehicle tracking used as well to provide evidence of attendance and work. These things can provide really high levels of assurance. But if you're going to use these additional data sets, you've got to know your data is robust and can be analysed smartly. There'll be outliers in that data which you might need to remove before you do your analysis. So here is a very, very good labour swipe piece of analysis and pattern. It shows on the top row what was happening between September 18 and September 20. The top orange line shows 500 workers going through a swipe at 7:30 in the morning. The blue shows them leaving site at 9:56 to go for a 45-minute tea break. They then come back onto site at 10:41. And similarly, you see the same in the afternoon tea break. Again, the data is analysed, perfectly shows the labourers going for canteen breaks that's 45 minutes, not a minute more, not a minute less. It can show leaving times, entry times, etc. The graph at the bottom was actually for the follow-on period, where the contractor was asked to move to different canteen slots because the site was getting too busy. But again, you see the peaks of the ins, the peaks of the outs, and the timing is very, very powerful to provide confidence that the workers are in the work phase for the allotted time. So, as I say, great data, but you've got to know when to use. So, getting towards the end now, finally, we need to start to actually evaluate some of the records. So, we understand the data. You've got to start to do your testing. Your testing needs to be based on what we've learned, the rules of the contract, the environment, the analysed data. So any of these tests, you're aware of, you've done previous, they're fairly simple, yeah? Some are obvious, some go back to the specific rules. What you've got to work out is which of these tests you do per population. What am I doing for staff? What am I doing for labour? What am I doing for agency? And as you go down these and you identify the tests that you want to do, work out the ones you don't need to do because you've got confidence in that first line of defence and really effective controls. So a good one I've got there is the rule about pre-authorised overtime. You've met your contractor shares with you what they do every month. They produce overtime hours report separately as part of the application for payment. And with that, they show all the sign-offs or the general communications that give you confidence that hours have been pre-approved. So again, it's a low risk because you've got confidence of the control being in place. So when it comes to designing tests and sampling, break it into your population sets and think about going down the columns as well as across the people for cost components. You've then got to design a basic audit template. Your work paper should show what you're doing, your objective, your method of testing, what samples you're taking, what time period you covered. You've got to draw a result and a conclusion from the work. So you've requested records, you receive them, keep on top of them. Yeah, remember, they won't always support the cost claim. Shouldn't be a problem. Work with suppliers. Ask them why. You need to understand better maybe what the issue is. Simple as that. Don't jump to the wrong conclusion. Really important is the bit underlined. Get the root cause understanding of why the record appears wrong. That's a much better approach than simply disallowing or withholding. So if you're sampling, it's always important the samples that you choose, whether it's a small sample, large sample, whatever, that they should be indicative of the wider population, will allow you to draw sensible conclusions. Mention the importance of writing up any inspection work. That will avoid duplicate, triplicate reviews that happen a year, 2 years, 3 years down the line, going back over old records that have been previously inspected. And it gets the project fit for closeout, clause 50.9, which is a new NEC4 edition. So, in conclusion, you want to start early, get confidence early, which will allow you to test less at the end.
Darren, I think just mindful of time in terms of the session today, probably need to bring this to a conclusion fairly shortly. I appreciate there's been quite a lot of questions on the chat function. Some of them are very specific. Some of them relate potentially to amended contracts and also to particular issues, but we will try and come back to those. But maybe down some final words to close out, and then if people can stand, we can take maybe a couple of questions, but mindful that people may need to leave.
Yeah, apologies. Yeah, we've overrun. So I think if I was just doing a concluding slide, I'd probably go to this one. So for effective inspections, yeah, pre-contract, do the work you can, audit rates, amend practically any additional requirements, rules, etc. Post-contract, get into inspections, again, read contract, visit the site, understand what's happening, where people are, where they aren't, build good data sets. Doing your audit work, you want to make sure that you design specific tests, building on good control, risk management from first line of defence. And as I say, reporting, whatever you do, please always write it up. Someone may always come back to it. And if things are wrong, understand the root cause.
Okay, thank you for that, Darren. And as I appreciate that we've gone over time there a little bit. We will obviously record this session. It will be made available. So if you've had to leave or your colleagues have had to leave, they can always rewatch it again if they have time. There are a number of questions that have been asked. We'll try and pick up a few of those now. Again, appreciate if you have to leave, because you can always hopefully pick up on the recording later. And we'll also try and do a bit of a write-up of the questions and answers. Darren, one question that's been asked a few times in a few different ways is, what sort of level of evidence would you want in respect of, say, timesheets, people working from home, people working remotely? What level of detail do you think people need to provide? Just they're working on the job, or actually getting into detail on what they're doing and how long these individual actions take under that particular timesheet?
I think every contract is different. If you look at what the basic detail is that is recorded on a timesheet, it might just be the name of the worker against a particular contract. Alternatively, that timesheet might be set up at a much detailed level, looking at specific tasks and activities. My personal view is, as long as there is a robust timesheet that backs up a clear audit trail to the contract, that keeps me generally quite comfortable. I would look at wider issues around how is the cost performing? Would there be a potential overspend on a particular area that might then warrant further investigation? And you could end up with quite detailed analysis, even becoming slightly forensic, Ian, that you start to challenge people's Outlook diaries, email outputs, etc. If you're really at that level of concern, it should be driven from something else within the project world, i.e. we're going massively over budget, we're never seeing these people, I don't know what they're doing. In terms of volumes of records, again, if you've got really good comfort on process and controls, I would keep inspections to a minimum. Generally speaking, good audit advice is 10% of records. That's not by value. 10% of records is a relatively good starting point to get a good understanding of anything you're inspecting or auditing.
Yeah, I think, Darren, come back to your point earlier, we could ask for very detailed timesheets and no one ever looks at, that there's a cost to complete and they just go on file. Maybe it should be more driven by if there's a concern, because ultimately under target cost contracts, that should be a driver for the contractor to only bill the appropriate time. They should have internal systems and processes to make sure people who are working from them are actually working on the job, and really then investigate where there is concern. Again, appreciate we're over time. I don't know, Farhan, do you want to think before we close out today?
Yeah, thank you very much to everyone for joining, and also thank you, Darren and Ian Heaphy and the Orange Partnership as well. I'd just like to say I've shared links in the chat for the 2 upcoming webinars we have on the 30th that you can see on the slide now. And also, yes, recording and the slides, etc., will be available on the past events section of the NEC website afterwards. Thank you.
Yeah, and we'll also try and pick up as many unanswered questions as we can, but appreciate that people obviously have other things to do with their time, so we'll let people leave for now, and hopefully you've enjoyed the webinar, have taken something from it, and hopefully you'll pick up on the recording for things you may have missed and the Q&A. So thank you for your attendance and engagement today, and thank you, Darren, for your time, and Farhan for your organisation.
Thank you. Thanks.
Thank you.
Bye.
Thank you.
Bye.